Good evening, everyone, and welcome to today's market wrap for Monday, April 7, 2025, a day that will go down in financial history for all the wrong reasons. Global stock markets faced one of their steepest declines in recent memory, with panic driven sell offs across all major regions, from New York to Hong Kong and from London to Karachi. Red dominated the screens. Global market breakdown. The sell-off was triggered over the weekend by unexpected and aggressive policy shift from the White House. President Donald Trump announced a sweeping set to tariffs, including a 10% flat tariff on all imported goods, with elevated rates for select nations such as China, Germany, and Mexico. These protectionist measures sent a clear signal to global market: the trade war is not over. It just entered more hostile phase. Wall Street opened deep in red and never recovered. The S&P 500 dropped by 3.3%. The Dow Jones Industrial Average sank almost 1,100 points, and the Nasdaq Composite fell by 4%. Tech stocks were hit the hardest, dragging the Nasdaq 100 into bear market territory, down more than 20% from recent highs. Asian markets opened first, and the reaction was brutal. The Seng Index in Hong Kong plunged by 13.2%, making its worst single-day loss in over 2 decades. The Nikkei 225 in Japan tumbled 7%, and Taiwan's benchmark index fell 9.7% as fears of disrupted supply chains and export collapses took hold. Europe fared no better. The DAX in Germany slid over 6%, while the FTSE 100 in London lost 3.84%, bringing its weekly decline close to 10%. This was truly a synchronized global correction. Pakistan stock exchange. But perhaps the most dramatic fallout occurred right here at home, in the Pakistan Stock Exchange. The KSE 100 index collapsed by 8,429 points, staggering 7.1% drop, closing at 110,280 points. The largest single-day point decline is in the PSX history. The KSE 30 index reached its 5% lower limit early in the session, triggering a market wild card as per the exchange volatility protection protocol. For investors and traders, it was a sobering experience. Within the first 10 minutes, millions of rupees were wiped off market capitalization. Brokers reported margin calls, stop losses getting bigger, and a complete freeze in buyer appetite. Institutional investors who had cautiously re-entered the market in recent weeks were quick to retreat. The pressure wasn't only global. Domestic challenges added fuel to the fire: rising inflation, a weakening rupee, foreign outflows, and overall lack of confidence in macroeconomic policy stability. For further information like these, if you like this video, don't forget to like, share, and subscribe to Top Zero